meeting less than a month away. We're joined by Nick Timiraos, chief economics correspondent and all things Fed reporter for the Wall Street Journal. Nick, what line jumped out at you most from the Fed minutes?
Well, I think it was the Fed staff forecast. And the reason I think that, the staff is pretty much putting a stagflation adjacent forecast into what they submitted for the May meeting. So what is the staff forecast, right? It's not something that the policymakers get together and vote on. They don't come up with it. The staff has a process they run, and they update their forecast at every meeting. And they say to the 18 or 19 policymakers, here's our most likely scenario for the economy. Usually, Liz, it doesn't change that much, a little bit here, a little bit there. But because of what happened with Liberation Day, there was a big change to the forecast. As you said, growth taken down for this year, next year, unemployment going up, the unemployment rate going up and staying above their estimate of the natural rate. So a permanently higher unemployment rate, not great on that side. What about on inflation? They revised up the inflation forecast for this year and for next year. And, Liz, they said, if we're wrong about this, if our inflation forecast is wrong, it's in the direction of even higher inflation in 26 and 27. Now, why does all this matter? It's just the PhD economists on the staff. It's not the policymakers. But the policymakers take this, and they're going to have to put together an SEP, the projections that they submit at the June meeting. They will work from this. If they don't agree with it, they can throw it to the side. But a lot of them will, take this on board. And so I think that's important.
Well, one of the headlines out of this Fed meeting minute was trade policy could pose greater downside risk to the U.S. than to other countries. Yep. So they're the ones with the tariffs slapped on them, the other countries, and yet the U.S. businesses and perhaps eventually the consumer will be the ones paying the tariff, correct?
That's right. The minutes are interesting because it's written in a very clinical, sort of hard. If you don't normally know what you're dealing with this document, it's not the most accessible thing. So let's break it down. When you read these minutes, if you think about where the Fed was at the last meeting, people were talking about, well, could the Fed cut rates in June? President Trump was out there talking about how he wanted to see the Fed cut rates. I read this. I don't see anything in here teeing up a rate cut anytime soon. If you look at the discussion on inflation or unemployment, first of all, it's all about inflation, and it's all about the risks of higher inflation, businesses passing through these price increases.
And Fed funds futures for June and July show exactly that. No chance, at least. And again, Fed funds futures are the market's betting mechanism. They're not Fed fund rates.
Right.
So it's the market guessing that there will not be a rate cut in either June or July, 60% in September. Is that what you are anticipating?
I have a rule, try not to think that many meetings ahead because there's a lot of data that's going to come out. I don't have to trade Fed funds futures. If you have to trade Fed funds futures, I'm sorry for you because there's a lot of data.
A lot of wishful thinking.
Right. Well, I mean, if we get one bad payroll report, then everything will move around. But for right now, you read these minutes, they are focused on inflation risks, and it's hard to see how you're cutting interest rates anytime soon. September, you're betting on weakness materializing in the economy. If you think the Fed's going to cut in September, you're betting on bad employment reports in July and August, right?
Nick, really quickly, GDP, second print of first quarter. The first print showed a contraction of 0.3%. The expectation is for another contraction of 0.3%. That's not yet a recession. You have to have two consistent quarters, one after the other, correct? What do you think is going to happen here? I mean, do you think the Fed is looking at a recession possible?
These data, it's like unearthing a time capsule from a period a long time ago. There was a lot of front running of tariffs that created all this noise.
Dislocations. Things have changed in the last couple of weeks.
And we've had the detente with China, so maybe things sort of settle out. Now, maybe you order a bunch of your inventories. You want to get those containers across the Pacific before Christmas, and so it could lead to more volatility in the second quarter print.
Nick Timiraos, a lot of work you've been doing and a lot of work to do ahead of the next meeting in June. Great to see you.
Thanks, Liz, for having me.
Thanks very much.